January 24, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using the NinjaTrader 8 platform. There was only one piece of economic data that came out today, which is around 6:45, which is about right here, 6:45 Pacific Standard, which caused kind of a small little blip, but nothing really. There's the flash manufacturing PMI and the flash services PMI. The overall chart looked like kind of like a big M configuration, big M structure, and you could argue that it stayed, well, it kind of stayed in a range, but it was kind of like three legs up with one really big leg down. So we get into the trades today. I took a total of 2 trades. The first one I don't think was a very good trade, and I was pretty much say I was probably lucky that I was profitable on it. And then the second trade was a little bit more thought out. And I think I missed probably a good trade over here. So in the pre-market prices are just moving up, and it's kind of interesting that from the yesterday's close to today's open, there's a gap up. Certainly, if you include the pre-market or the after-hours trading, there is a very gradual move up. And I've noticed, well, I'm sure a lot of people have noticed, that when it gaps up like this in regular trading hours from here and it opens up here, the market tends to want to close the gaps either on one side or the other. If it was bullish or bearish gap, it will tend to kind of close it, try to do it in the same day. At least that's what I've learned. But I didn't take that as a trading criteria, so I'm still just watching price action in the very, very small scale 2000 ticks. So prices move up, and then it kind of tapers off a little bit. So it is obviously a very gradual bullish rally going up, but then it kind of stalls out here. Then the market opens. So here it opens, it creates a first entry long. Technically you have a second entry long here. This is a good signal bar, but it just feels very congested. It's very early in the day. There's only 3 minutes. So I saw the second entry long, but I didn't really want to take this trade because the second entry long happens so close to the first entry long, and there was only one tiny little tick above. You could have easily just seen this as the first entry long. And so when there's a little bit of ambiguity right there, I tend to be a little more cautious, especially on a day or during this time of day where it's very early. But if you did count it very tightly as first entry long here second, then you would have gotten probably a good scalp out of it. Prices then continue moving. You do have a second entry long here, but this doesn't really, it's not a very good setup. At this point, I drew this purple channel because I thought there's a trend line here, and then here I tried to match it up. So I was playing off of this potential channel. Here it just looks like piano keys, so I'm reluctant to take any trades, even if there's a second entry long, just because look at the candles. It moves all the way down, and then the second candle, this is an inside bar. There's 4 inside bars to this really big one. And even the 4 inside bars, they're moving pretty much the entire range and closing near the highs and near the lows. So you're just kind of creating these big opposite candles. So it's hard to really know what the next move is going to be with any real confidence. And of course, then you get this big flash up. But of course, I'm not ready to take that trade, and I'm okay seeing that big flash up. When it comes back and it creates this big flash down, I'm liking that this purple channel is holding prices pretty well now. So I'm confident or feeling pretty confident that if I see some kind of setup near this, I can use this as another key entry point. The bottom is a little bit more iffy. It certainly has 1 touch, 2 touch. But of course, I always wondered if it would have been at this time of day, maybe down here. But then this is the only 1 touch here. So I left it up here at the time. And I needed a little more confirmation down here before I took any trades here. But I liked the top one just because since it's bearish, you're thinking of going short and you'd be going with trend. On the bottom, if it confirms, it's a little more riskier because you'd be going counter trend. On this bearish downtrend, you'd be trying to go long on it. So prices then continue moving. Technically, you have a new high here. It's a first entry long, pull back, second entry long. So this is actually where I took my first trade. Let me back up. I saw this as a new high. I said first entry long. When this came back, I was thinking this is going to create a second entry long. I saw this as a bounce off the bottom of this trend line, which I counted it as a confirmation here. It's coming off, so I'm thinking it's going to push all the way back up to here. And I was thinking this might be in some kind of range. This was actually a little higher at the time. I actually had this higher up to here. And I was thinking it's bouncing off. The thing that, so this is where I took my trade. It flashes down, my exit's here. So I saw this as, potentially also a triple test. So I saw a second entry long triple test. When I took the entry, I failed to take into consideration that the EMA is coming down and it just got rejected previously. But I think since yesterday was such a slow, grinding, nothing happening day, I was probably a little too eager and I saw this setup for more than what it was. So I entered one tick above, came down, it almost took me out because my stop is one tick below here. It pushes back up and now I can't even get out break even yet. If it comes up, I didn't take the break even trade, which in this, after I saw this, I should have thought about maybe taking a break even trade because this was not even a good entry in the first place. Because if I was playing this range, I took it at the high of the range. Flashes back down, it creates this triple micro triple bottom, but it's only like two or three more ticks and it definitely would have gotten stopped out because my exit's down here. Comes back and it flashes back up. Again, when this flashes back up, I didn't think about getting out break even, which I should have considered, but this time it gave me a little more confidence to stay in the trade because it broke out of the range that I thought was where price action was. However, even though this was kind of breaking positively, since this wasn't a good entry, I should have considered just getting out as soon as I can. Probably have tried to get out here or break even plus one tick to cover commissions. But since I stayed in for so long, I was able to get out before it hit the top. But I think this trade definitely should have been skipped. This is a bad setup, bad trade. But I was rewarded, which isn't good because I don't want this to develop into a bad habit. So I did take some notes on this and I'm more cognizant of what's going on because yesterday, as I mentioned, was such a slow, meandering day. I think this knee-jerk reaction of me just jumping in was definitely just kind of too eager to take a trade. So I did see this as a new low. It's a first entry short, second entry short here. It's also a lower high. I thought this might have been a trade here, but I felt it was kind of aggressive because so let me get through my notes. This trade would have worked if you took it on the engulfing because it bounced off the top of this purple down channel. It's creating a lower high. It ticked one tick above, then it started to push down. This looks like EMA is holding. The problem is you don't want to get potentially run or rejected or have a bounce off of this very possible lower part of the range because as you can see here, even though it broke out 2 times, there's clearly something being respected here. So it could just go 2 ticks and then flash back up. So I felt like if you took this trade, it would have been aggressive. I would have wanted to take it maybe one tick below these two, or even at the same level as these two, just to ensure I get pickup, momentum's good, and it flashed down before you hit the bottom of this purple channel. So I didn't take this trade, but I thought it might have been an aggressive trade and a possible trade if if you read it faster, better than me, maybe you would have taken this trade. It's coming for an overshoot, so you might have also another corresponding break and push back in. But it looked like it worked. Falls down on this green channel. I don't see any real trades that I like. I saw this as a new low, first entry short, second entry short. This is a decent signal bar. It could be bouncing off the bottom, excuse me, at the top of this down channel. It would be going with trend. What I don't like about it, so I first drew this orange channel going up. What I don't like about it, it has this overshoot. So it's pushing back up. It could push to this side and create a corresponding overshoot here before it continues on its way down. But it looks like it does that. It pushes up. So I'm pretty happy I didn't take this short. And the short is kind of above the EMA at this point. So if it actually formed down here, then it would have been worth taking. Prices then continue moving up. So I expanded and I decided that maybe it's this yellow channel. The yellow channel doesn't quite work, so it broke out. So I'm going to go ahead and delete this yellow channel because it confirmed once, twice, kind of a third time, but as you can see, it already broke out. It doesn't fit that well at the top. So that was what I did have earlier. So it's more for educational purposes. Then prices continue. It falls into what I think is this red up channel now. I had one touch, two touch, three touch. So I thought at least 3 touches here and at least 2 to 3 touches up here. So I'm watching carefully. You don't really get any good setups. Technically, you have a new low here, first entry short, second entry short. This isn't a very good signal bar to go short on. On top of that, it is counter trend to this potential reversal. So no trades there. It chops around, continues moving up. This is just nothing I like, or no good clean entries, unfortunately, because it looked like it had a pretty strong push up. Then it comes back down, it breaks through, it actually bounces. So it's like a first entry long, pull back. This is technically where second entry long is, and this is the pre-market highs, and this is the pre-market lows. So you could argue that you have a first entry long, second entry long, and it wants to push back into this red trading channel. But I didn't like the signal bar, and after the trigger bar closed, I definitely did not like the setup at all, because this is indecision right here, and this isn't very convincing either. So if you want to go long, you're going to run into the EMA potentially. You might run into this green down channel, and if you decide to go short, I don't know if this is actually going to push back in or not. So it's just a couple of factors that are making things a little confusing for me. As you can see, it gets a little choppy. If you went long, you would have gotten out. Pops in. I think I'm in a trading range now. I drew this orange down channel, but I don't really like it because it doesn't fit very well. It looks a little weak. So it was just more cautious on taking any potential trades. And prices move up. So this green channel fits pretty nicely. And so this actually creates a second entry short triple test. So you actually have a new low here. It's a first entry short, pull back, second entry short. You also have potentially in this trading range a triple test. It made one attempt up, a second attempt up. You could count these individually as well, but I just looked at it as very obvious first attempt, very obvious second attempt, and there's a very obvious third attempt right here. It's also the break of the green channel made a new high. It actually tested the new high. So this could have been a possible test, possible trade. The one thing I wanted out of this trade for me to take entry was this had to close more bearish, actually right at the lows, and I think it would have been more. I would have been more confident taking it. And I was wondering if this is a failed breakout, if it's going to create another failed breakout here. So after the break of this green channel, it made a matching high. If you're going to make a second attempt to clearly push higher, I wasn't sure. If it closed very bearish, then I think I would have been more inclined to say, okay, I'm going to take this risk and take a potential short. It looks like it would have worked. And then you get another chance here. So it confirms with a higher low. And even though higher low is formed, I felt it was kind of in the middle of the range at this point. And yes, there is potential they could break down, but I just wasn't too sure if I left it alone. I think I would have been pretty nervous after seeing this candle on this higher low, but if you stuck with it, stuck to the rules, you probably would have gotten your scalp. And depending on how many points you're going after, you might have gotten stopped out. Actually, you wouldn't have gotten stopped out because your exit would have been one stop above here. So you would have been okay. And prices continue moving. It moves up on this green channel, has a breakout of this range now. At this point, I wasn't sure if this is a small, very gradual move up. I saw two measured legs, one push up, consolidation, a second push up. So I was wondering if this attempt up might have been played out and might be coming back down, because this could be one leg down, push up, second leg down. But then it was confusing because I got two legs up. So now is it going to come back down or is it going to go up? It's just in a range. Certainly this red channel probably wants to test its highs. So it was a little bit confusing. I wasn't too sure, but I also drew a potential trend line down here and created a channel up here. The channel was actually a little bit tighter at one time. And I had it down here just so it looked like it got more of the meat of each bar. When prices moved up, kind of respects it. It breaks out of this green channel, makes a new high, so the uptrend may have played out, coming back down. It creates this 5 candle matching high. So I'm just watching this, but there's no setup that I like. So it creates a first entry long. Here, I do like that it confirmed the bottom of the purple channel now. Goes up, and now it kind of confirms the top of the purple channel. So I'm thinking the purple channel, even though it's very shallow, it's starting to show kind of a bullish uptrend, kind of resuming the attempt of this red channel. I'm just still watching and waiting. Hops around. I don't see anything that I particularly like. There's only a first entry here. Breaks out, starts coming back down. You have a first entry long here. Technically, you have a second entry long. So it's a first entry long, just barely, and a second entry long. This is a decent signal bar, but I also felt like just one leg down. Even though it ticked one tick higher, it just felt like it was more like one leg down. pushes out, creates a new low. I'm watching to see if it's going to be a bounce off this bottom of this purple channel. It kind of does, but the way it closes is very ugly. It closed way down here, even though technically it closed bullish because it opened down here, did a bunch of things, spiked all the way up to here, couldn't break past the previous high, then closed low. So certainly if you're thinking first entry long, second entry long, plus it already broke out of the orange channel, made a new low, maybe the downtrend has played out, you could argue that it's bouncing off the purple, but this is a terrible looking signal bar, and it looked like it failed. The price is going to continue moving down. I saw this green channel, but it doesn't fit that nicely. It consolidates. You do have to have a new low here. First entry short, second entry short, potentially a second entry short failure, but it doesn't fail in this candle. By the time it does fail, taking an entry above here, it felt a little too late. The trade's already been made. So again, I'm just watching now. Kind of falls down on this orange channel going down. Has a breakout, pushes to the other side, and here comes back down, tests the low, but it doesn't create a new low. And here it finally does. So you're thinking maybe the downtrend has played out. However, it looks like the market's kind of reversing itself now. So it was going up now and now looks like it's coming back down. This red channel doesn't exist yet, so you can ignore it. I kind of drew it at the end of the day when I was trying to see the total market profile. Pushes up. I see a new low here. It's the first entry short, second entry short. The second entry short I thought was maybe a possible trade, but it is very aggressive because you might be potentially at the top of this potential consolidation range. Again, I don't have this yellow channel yet, so I don't have this as a key entry point. So you'd just be playing off the basis of maybe the EMA is pushing prices down and I might be at the top of the range. But the signal bar wasn't good enough. And then when the subsequent candle closed, this is a better signal bar, but it took a second attempt. And then when the trigger bar confirms the second entry short, because this one confirms that you actually have a second entry short, this is a very, very ugly doji bar. So makes me very nervous because it looks like there was enough push on, if I want to go short, there's enough bullish push to have it close here. But it looked like if you took it one tick here, you might have gotten scalp. Might have gotten the scalp and then it would have went down. But here it's just the setup I felt would have been aggressive. It kind of falls into this green channel coming down. I don't see any good clean setup. This is probably one of the better setups I saw today. Unfortunately, I didn't take it though. The new low, it's a first entry short pullback. It's about to create a second entry short. And at this time, I do have this yellow down channel. Confirms pretty nicely. It does fit relatively nicely at the bottom. I also saw a potential range here. So it's not quite a triple test because it didn't really try to break up here. It only has a double test right now. But it has a pretty strong signal bar, and I'm thinking there's enough momentum down. So after the break of this green channel, it made one attempt up, pushed down, second attempt up. So this second attempt up is also probably a second attempt to test the lows because it made one attempt down. Now it's going to make a second attempt down. And I felt like there would have been enough momentum to push this all the way down at least 1 point for a quick scalp before it hit the bottom of the range. It looked like it would have worked. It drops around and kind of reverses itself back up. And this is actually where I take my second trade. So I saw this push up, and I saw this as a first entry long, second entry long. The second entry long technically hasn't failed yet, but I was pretty confident it was on its way to failing. So what did I mean? So when this trade I kind of closed here, it's the break of this orange channel. It made one attempt up, and now it wants to come back down and test. I like that it when I was watching. So this is kind of a in real-time analysis that I saw, a real-time deduction that I saw. When this opened right here, it ticked one tick up, then immediately came back down. It immediately came back down. It's pushing really hard. I saw some trouble for the bulls to try to get it back up, to test the highs here. So I saw it. I decided when it closed here, I wanted to get in. So I entered right at the lows of this candle. I didn't want to enter one tick below. I want to enter one right at the lows to ensure I have enough room to get out. I would be pushing a little bit past the lows here, but since it's closed very strongly, I entered here and I was able to quickly scalp out because I just saw the quick one move up, strong push down, and I saw this low still hasn't made a new extreme down here. And this close was so strong, it looked like there's enough momentum to push down for a quick scalp. So that kind of fed into my analysis. And on the bigger scheme of things, I felt like it was part of the downtrend coming down because this yellow channel looks like it has one push up and it wants to come back down and test this low. So I kind of use that as another basis, but more, I guess more of the factor that made me want to take this trade was when I saw it tick one tick up and immediately came back down. And I thought, okay, it's being crushed back down. When prices continue moving, it went up, and then you have first entry long. Technically, you have a second entry long here. It's a good signal bar, but it doesn't have a clean setup. The context doesn't look good. Kind of bounces around. I did see this gap here. So it looked like it broke out of the green channel, made one attempt. Well, technically it broke out of the green channel, made one attempt down. Now it's pushing one. Then it made a second push up and saw this gap. Typically, when I see a gap, I usually think when it sees a gap, you could probably enter in the direction of the gap. So I was thinking if I had an entry here, one tick below, would I have gotten filled? Obviously I didn't, but it looked like this gap pushed up would have gotten you at least a 1 point scalp, but it didn't do what I thought it was supposed to do, which is kind of come back down, pick you up, and go. Keep in mind, the data feed could, on other charts, even your chart, show that this was not a gap. So this is just something I noticed. Prices then continue moving up, kind of comes up. You have a first entry short here, and that's all you get. Technically, you have a second entry short here, but it doesn't look very good or clean. Plus, you're entering the last 10 minutes of the day where it just gets choppy. So it's like from 12:50 to 1 p.m. Pacific Standard. And I don't want to trade anything in here just because I know things get very whipsaw. They don't quite, it is not quite as obvious and easy to read the chart at that time. Plus, I already had two trades today, one of them being iffy and the other one being a little bit better. I didn't want to risk giving back any of the profits. So that's how I saw the charts today. Hopefully that was helpful.